we all know that there is a bit of a turnaround happening there. A lot of interest is coming to India with respect to the export potential. A lot of capex is happening there. But to decode all of that, we have Vinnie Mehta joining us to talk to us about from Director General at the Automotive Component Manufacturers Association of India, of how exactly it's likely to play out. Vinnie, hi, good to be speaking with you. That's the first question I have for you. The headlines today suggest that the auto companies are planning capex of $7 billion to boost the component manufacturing in the country, whether for domestic use or exports. Is that a realistic number? What are you hearing on the ground? And is really that much potential there that we can add such a huge capacity?
Well, I think the potential would be even more. These are numbers coming from the association, so they're normally conservative. I think you must look from a perspective that the vehicle industry is doing very, very well in the country. FY23 was a great year, and FY24 continues to be very, very good. You all are analyzing and must have analyzed the Q3 results of the auto sector. So the numbers, which is really we're looking at investing around $6.5 to $7 billion. That numbers comes alone from the auto component industry, and that's because we believe that the industry is transforming in a very, very big way. We're looking at zero emissions. We have to prepare for that in EV, whether it's hybrids, whether it is alternate fuels. So you will see a lot of investment happening. Also, when you look at the vehicles today, the consumer wants bigger vehicles. You're seeing that in the two-wheelers. You are seeing a huge uptick in the commercial vehicles. You're seeing huge uptick when it comes to SUVs. So there is a change in the consumer, behavior pattern. They want bigger stuff. They want better stuff. And that apart, there are many regulations that are coming in, whether it is for safety, whether it is for emissions. So the value add from the auto component industry is growing very, very significantly. And that apart, we are readying ourselves for, transitioning to zero emissions. So all that requires a very significant investment from the industry. Yeah.
Right. So you spoke about the triggers. What exactly, is triggering this new wave of capex? Yes, we did, track the earnings very closely. Vinnie, I want to understand what are the categories. There are 50 components which go into a car, right? Or for example, a vehicle. What categories can you, because we, business journalists and analysts analyze category and then the company which are operating in that category. Okay. I know you cannot take company names, but at least tell us, okay, the tire manufacturers are doing massive capex, the gear guys, it's the brake guys or battery guys. Give us category which are witnessing highest.
First of all, there are not 50 components, there are 3,000
components. I'm sure.
Oh my God. And also, what's very, very interesting is that unlike rest of the world, you would sort of be hearing that Europe is moving towards completely electric or carbon neutral by 2035. US will probably be doing sometime around 2040, 45. So is Japan. China anyways is transitioned very significantly towards electric mobility. But in India, we believe, because our carbon neutrality deadline is 2070, we believe that the automotive space will be quite ICE-driven till some time. But of course, we will see all the other alternate technologies coexisting. So when we talk about the investing in future, we're looking at all segments of the powertrain, whether it is ICE, whether it is CNG, whether it is electric, hybrid, and of course, work has started in terms of hydrogen and stuff like that. So all segments of the powertrain, you will see investments happening. And across the segments, now you're seeing that government has mandated that the cabins will be AC for commercial vehicles. So you will see investments in that segment. So what I'm saying is that there is tightening of regulation happening in terms of emissions. You're finding regulations for safety. These two areas will see a lot of investments in time to come. The industry is moving towards newer technologies. ADAS will be one area. You will see a lot of investment. A lot of electronics is getting infused into the vehicles. So auto electronics is another area. We just did a study at ACMA, and we believe the opportunity for localization for electronics alone is to the tune of $70 billion by 2030. So that's another very, very potent area for investments to happen. EV and EV technologies. That's another area. So it's really a wild field, and it's a huge sector with great linkages down the downstream. So and these are good times to engage with India and the Indian auto component industry.
We'll let you go on that one. Thanks so much for explaining. So very important trigger points. I mean, this is something I must tell you the entire market is taking note of. We keep getting commentary from the OEMs on demand and new launches and all of that. But such a clear, big commentary from Auto Ancillary Association head saying emissions, safety regulation, exports, upgradation on tech and higher components on electronics, all these combination put together is triggering a wave of new capex, a fresh capex across industry. He puts a number of $6 to $7 billion spread over the next 4-5 years. Thank you very much, Vinnie, for your time.